Welcome with the last episode of this year of the Market Reporters. Last year we already looked back at the year as from a share perspective.
Last week, you mean?
What did I say?
You said last year we looked back.
Oh, I'm so sorry. We looked back, and what we did, maybe you saw the episode. If not, you can of course have a look if you go one episode back. We looked at the best and the worst performance of the whole stock market. So we analyzed, not analyzed. We made, of course, our we have a system for that. But we looked at 50,000 more underlying shares.
Correct.
And what we saw is the worst one, not the one that went bankrupt, but the worst one performed minus 99.99%. And the good ones, the best one, plus 1,200%.
Correct.
Most of the shares I think you never heard of,
No.
but still it's interesting. And also we make an interesting conclusion
Absolutely,
there.
yeah,
Watch
yeah.
it back. So, but this is
Yeah.
the second part of the show.
Of looking back.
And what we did, and especially Martin did it, we looked back at our 51 vlogs we made this year. We
I
made
started last Friday and I just finished this morning.
Just, yeah. It's
51
now Thursday
vlogs.
afternoon. We make a vlog every week. We are here every week for you. We hope you like it. We, what you said there, that we grow a lot. We make two vlogs, by the way. We make one in Dutch and one in English.
Yeah.
And in the Dutch one, we have quite some viewers. And I think
English
that-
one is growing. It's
Yeah.
steadily growing.
So I hope you like it, and I wanted to close off, but I say it now here. If you have any suggestions what you want to see for next year, please let us know, because we talk about sometimes shares, we talk about sectors, we
Macro.
talk about bonds, we talk about macro, we talk about
Yeah,
the
huge
stock-
variety of
yeah.
things. Yeah.
Today we're gonna talk about 6 vlogs, but not about the vlog, but what did we talk about in those 6 vlogs, and where we don't give advice, but in some vlogs we said, okay, watch this, this can be interesting, and sometimes we were wrong and sometimes we were right.
Correct.
And I think it's for you interesting if you look back. It's for you also. Oh yeah, then because we talked, for example, that's the 1st of February about the oil sector, because the oil sector was hot.
Yeah,
we
yeah,
talk
yeah,
about what we experienced with our investors the whole day.
Yeah, and also, but we also try to do a little bit different, right? So if everybody is talking about Powell, then we're not going to talk about Powell.
Yeah.
We pick something out which is relevant, but is a little bit under the radar for
Relevant. That's a good one. yeah.
for the clients or for the people that are looking at us. So yes, the 3rd of February we talk about oil, and you were at that moment mainly speaking about OPEC, the macroeconomic situation of oil, the prices, the inflation related to it, etc. And I picked out some oil companies like Shell, BP, Chevron, Exxon, and Occidental Petroleum. And what I did was I made go and look back at the video if you want to see it. I made a little table, and I put in the different characteristics that I think for that moment were interesting, like the price earnings, the dividend payment, etc. And we made a very simple score table. The stock that had the most green scorings, to say it like that, was the winner. And at that moment we predicted, based on that outcome, that Shell was the winner or had the most potential, also based on what Wall Street was thinking about. And if you look at the chart, yeah, it's funny enough, we were right, because Shell was the absolute winner compared to Chevron, and the worst performing stock was actually British Petroleum. And we already said it at that moment, they were losing money, and they were still
Quite a big difference for companies that are doing almost the same,
yeah,
trick.
yeah. So yeah, Shell was the winner, did it very well this year, went up from 24 to almost 30. So good for the people investing in Shell.
1 month later, 6th of March, we talked and we compared, and we went in depth, I think, again with IBM and with Microsoft.
Yes.
Martin, take what.
Yes, as well as I made my homework on Shell. Well, like I said, Kaspar, we don't give any advice here, but we had our doubts about Intel, whether they are not be able to make the turnaround, and maybe not so much if they were able to make the turnaround, but how quick they were able to do it, because they were investing heavily and are investing heavily in building new fabrics. And I warned you to be careful with the share price of Intel, with the shares of Intel. Unfortunately, my words were not spoken, or the video was not published, and the stock started going up with almost 93% this year. It was actually the best.
How much, Martin?
93%. So I hope people didn't sell their stock based on my warning in that case. But like I said, no advice here at any moment. It's always based on what is out there in the market. We try to bring it to you, so you can put it into a perspective, and that is basically what we.
And IBM is always. We said in that vlog, it's quite a boring stock. It's not going up and not going down that much. So it's a stock that you can consider when you expect that markets will be volatile and a lot will happen. Then you see in the past IBM is a little bit boring, but a good stock. And since the vlog, it went up with 29%. So it's still for a boring stock, and that's a lot. You can think, okay, but also in the good times, you can't make any money out of it. No, 29%. I think for such a boring stock, it's also interesting.
Definitely,
Yeah.
definitely.
IBM.
Absolutely.
Yeah. Number 3.
Yeah, in March you were sitting all of a sudden on your own.
Yeah, and we don't know anymore where you were.
No, I don't know where I was. 31st of March. Well, it doesn't really matter. But I was definitely not on holidays, and I was not ill. But you spoke about Alibaba, and you warned people for the discount on the stock, based on the currency discount. Actually, that was the most important thing. And you said that it was on a technical basis quite tricky, because we were in front of quite a heavy resistance. The stock
at
was
100.
At 100.
Yeah.
And it could go anyways. There was no really clear signal. You also didn't give a clear guidance on it, but you were right in the sense that the 100 was a very heavy resistance because the stock went down 25%.
Yeah, and it's also of course due to what's happening in China and all the regulation and the economy that is facing headwinds. So altogether, Alibaba, it's become. I think it's more like a trading stock now. You see, it's going up and down, and you don't hear big investors anymore talking about it.
No.
It's not a really popular stock anymore. I think.
No. In the past, it was compared as like the Chinese Amazon, but it's too far.
But I think it's good to dive into it again next year and to see where they are now from a fundamental perspective mainly. Yeah?
Definitely.
Number 4.
Number 4. We're getting in the 4th month of the year. It was April. And in April, we talked about Tesla. And we many times talk about Tesla because, of course, there's a lot of things. If it's not Elon Musk.
But not too much.
Not too much. We're not Tesla freaks or Tesla fanatics. But we talked about it. And I actually said, and at the moment that was the truth. Everybody could see that based on the technical indicators, the RSI, the relative strength index, at that moment, there was no clear signal whether the drop in price from 250 to 60, what it was end of 2022, to 150, 160 was the end of it. It was the RSI was trading in the middle, no clear, like a neutral signal. However, you had some more positive outlook on Tesla, mainly on fundamentals, more cars are sold, but also you talked about.
Well, I think about the strategy.
The strategy.
If you buy the share, then you must understand and believe in the strategy of Elon Musk. And the strategy, I think it became more clear in that period, is that they want to have market share. And they lowered the prices this year, I don't know, remember, maybe in the US like 7 times or something, and in Europe also, lowering the price. And then the result is that you sell more cars to new clients, so you increase your market share. But of course it's a pressure on your profit margin.
Correct.
And that you have to believe in. On the other hand, they have no debts, so that we spoke about, and I think it ended up good, no?
Yeah, the price went up to 260 something.
From
160 something, so $100 more for Tesla. So you had correct. No, I said it was going to stay neutral. I didn't say anything. One of the vlogs that I liked myself a lot about, also because we put a lot of effort in it, was in May. It was about the copper market. And copper, of course, is a commodity that is needed for electricity. It's something that is very
for Tesla,
but also to get it. It's difficult to get out of the ground. And copper price, just to dive into that first, went up from $350 to $396. So we had a pretty significant rise in price. So it was fair enough that we mentioned it as a topic. And on the other hand, we also talked about BHP, Freeport McMoran, Teck, Southern Copper, and Rio Tinto. And mainly Southern Copper was interesting because it was a smaller company, but you highlighted that they had the largest stock of copper. And that could be important because it's very difficult, as we said, the demand is rising, to get new copper out of the ground. It takes about 15 years to get a mine operational. And Southern Copper, if we look at the chart, was actually the best performing out of this list of 4 or 5 companies. So, yeah, nice to see that you highlighted a little actually smaller player outperformed his components.
And I think what you said, it's a really interesting vlog. It's still actual. Yeah. You can look it back. When was it? From when?
It was in May.
In May, and it's because I think if you believe in it, you must have a long horizon. The demand, you don't know, but it will be bigger. It's already bigger than the supply. Now the supply is quite clear how much they can supply with the existing minings and the upcoming new mining companies. So it's really interesting product to look at for a longer term.
Correct.
So have a look at it.
And the last vlog we want to highlight was in July, already end of the summer, 28th of July. We talked about the cloud service and cloud computing as a sector, and specifically about Amazon Web Services, Microsoft, and I talked about Snowflake. And you were positive at that moment about Microsoft. Because they were actually generating most of their profit out of the cloud, and their cloud is of course a growing sector.
Yeah, what a really interesting chart, I think, where you saw the business model of those companies, and the percentages of the revenues.
Exactly,
where they
exactly. And yeah, we all know what happened to Microsoft. It went up tremendously. And I highlighted Snowflake because Snowflake has a very specific technological surplus that I can compare to Amazon and Microsoft. I'm not going to repeat that, sorry for that, because it's a little bit too complicated. I'm happy that I could explain it to you at that moment. But go back to July and you can learn more about it. Snowflake was a company and is a company that was losing money, is losing money. Price went up from $175 to $200. So also nice that it caught our attention. And do your studies yourself also about this stock, I think.
That were that
were the 6 vlogs that we.
And we hope that you see. Oh yeah, back then we had that. I had it also. That share. I sold it or not. I'm still thinking about it. Correct. So use this time of the year to reflect to mirror yourself, your portfolio, and see if you think your portfolio is ready for 2024. This year was a strange year. The tech sector went up a lot.
You have driven by the interest rates.
Yeah, and probably interest rates will go down next year. That's normally good for shares. So yeah, take it all in consideration. And again, what I said in the beginning, if you have some advice for us where we can focus more on or again on, let us know or in the comments or directly to us, and then we take it. We do our work. We do what you want. Thank you for watching. Have a great end of the year. Happy New Year. Happy New Year. See you next week already.
See you next week.
And give us your time. Thank you.